Good evening. How are you?
Lots of days off.
Yeah.
Yeah.
What day it was,
Yeah.
Every once in a while, somebody suggests switching to a 4-day work week.
Oh,
I think that would be strange. And then when I worked at the county, one of the departments came up with the idea where they did 10
yeah.
10-hour work days, but only 4 days a week.
Yeah.
And I thought, that'd be kind of sweet. But then now they had to stop because they were part of the social services. And they said that by shutting down on Friday completely, that it was unfair to certain people who could only get there. Yeah. But that would be weird too.
During the pandemic, everything was closed.
Yeah.
Like my sister works at City Hall. They were working from home.
Yeah.
I mean, it was just completely shut down. Everybody liked that working from home.
Yeah, then you get used to it.
And then they went in like half days and
Right.
I mean.
Well, it's funny. So when they first started doing like distance learning, I knew this was going to be an issue. They said like the state, they have a bureau for vocational schools. They didn't really catch on to it because they thought it'd be too easy to cheat, and you could have somebody taking the test for you. It's an online test. And, well, you could do this screen capture, yeah, but you don't know what's going on behind it and all that. So they really dragged their feet. Well, all of a sudden, when the pandemic hits, it was like, okay, yeah. And I was like, wait a minute, you guys are all worried about what happened overnight. Well,
Yeah.
because everybody got desperate is what happened. But and it seems to work. So One of those things, necessity is the mother of invention. They never did tell me how they got over all those hurdles. And I was thinking, they wouldn't have been so obstinate, could have had this a long time ago. So, as you see, even with our classes, some things are banished to being here, other things are banished to be online. So it's good to have a hybrid. But if we were teaching rocket science or something, nuclear physics, I don't know, that'd be kind of hard. But
To do it, yes, online.
right, but so many people learn things, basic skills from YouTube now.
Oh, yeah.
Yeah.
Everything.
I noticed that I used to kind of play with things to try to get them to work for him, seek help. And my mother-in-law has one of those. It's a dispenser for aluminum foil, and she needed to refill it. So she said, "Can you figure out how to refill this?" So I'm looking at it. I was thinking, this doesn't work. Okay, how would you get this out? And instead of sitting there and working at it, I went to YouTube. Sure enough, Googled it, and somebody had it online, and I did it right away. And then I thought, I think you lost something there. Because before I'd figure it out, and then I feel like I achieved something. And this way I feel like, just look it up and it's done.
Yeah.
But everything from that to, we had to fix our dishwasher. That was online. Yeah. So as long as it works. All right, well, welcome back to QuickBooks. So you need to bring up your QuickBooks account. And it was so long this morning since I logged in, I forgot my password. I had to reset it. So what I did on mine is I did include my phone. And what it'll do is send you the code, and then you can reset it. And it just took a minute. But I know there's a capitalization. I knew I'd capitalize something, but I got out of the habit of logging in every day.
Yeah.
And so I forgot it. So I had to reset it. So just so you know, it is pretty easy to reset. I will say that's one of the differences between the online version and the desktop version. The desktop version, if you set a password and forget it, it's bad. It's really hard to get it back. QuickBooks, they can do it, but they'll charge you an arm and a leg and have to go through all kinds of things. So I don't know if they've ever changed that policy, but that's one of the differences. And the online version, it was just boom, boom, within a minute. I changed it and ready to go. So I understand the need for security because this is pretty sensitive information, but at the same time, of all the ways people are going to break into things, that may not be the most direct way. So I would think they'd make it a little easier. Maybe they have. Same too, when you set up your sub accounts here for people to use QuickBooks and have access to different categories, you could set passwords. I've never had to try to reset one of those, so I couldn't tell you how that works. All right, well, for today, we're going to start off and we're going to try something a little different in QuickBooks because this is the advanced class. It's part of QuickBooks and yet it's not really. It's not part of the general bookkeeping, and it's mileage. So if you click on the left-hand side, you should see mileage. Or I believe it's also up here under maybe not. I thought it'd be under new. I think it's just under mileage. So you should get a screen like this. It's going to tell you that you get 56 cents a mile. So the way it works, so I think I mentioned this before, is an employer can ask an employee, or if you're your own boss, you can track your mileage. So the company can reimburse you the mileage, or you can take it as a tax deduction. So is everybody clear on the difference between a tax deduction and tax credit? So, the tax credit, you get the full amount back. The deduction deducts from your income. So, as I said last week, they just changed the new tax categories. So if you're close, even your business-wise, if you're, about $500 off from being in a cheaper tax bracket, then this kind of thing can help because it can lower your taxes, and what you count as income, and then you won't pay as high a tax. So the way it works is either your employer or you can get 56 cents a mile. If your employer says, well, we're only going to pay 40 cents a mile, what you can do is still track it and then take 16 cents, the remainder, from the IRS. The thing is, you can't have it both ways. So if you get reimbursed for mileage, then that's it. You can't say to the IRS, oh, here's my mileage, if you already got money back for it. The way it works, though, is the employer is supposed to report this. So if you're doing this on behalf of the employer, you should run the reports, and it counts as income to the employee, and then they can deduct it based on their mileage. So there's a couple of different ways to handle it. As you'll see here, you get a couple of options. For speaking of ease, you'll see that we have a little QR code here. So you can use this, and then you can link your phone to it. And that's a little easier because most people have their phones with them. So when they're out driving, you can just link to it. It has a little app, and it'll, you put start mileage and end mileage and keep track of it that way. Or you can just enter a manual. We're going to enter a manual. But if you are doing this for business, it's a good idea to have the app on there. My experience is when people do this, the biggest problem is remembering to do it. So if it's on your phone, maybe you're more likely to remember it. It gets harder if you, let's say you do it all year and you keep track of it, maybe on little pieces of paper or something. At the end of the year, you got to enter it. Well, that makes it a lot more difficult because you got to remember, got to get things in order and, figure out what everything was. So it's a good idea to try to keep up with it. And like I said, the types of things that can be used for this is if you're going to visit a client, if you're delivering something. The only thing you can't use is if you are doing like going to work. So you're going to your job in the morning. That mileage doesn't count. That's kind of just normal mileage. But anything other than that, and that includes if you need clothes for work. So by the way, clothes can be tax deductible too. Just remember, I'm not giving you tax advice, but keep that in mind, and you can look it up. And there are certain ways you can deduct clothes. While buying those clothes, you can go out and drive. So those miles too can be deductible. So you got to include those because those are a business expense over and above the basics. So like I said, we're going to use the manual. So you'll see here, add a trip manually. Okay. So I click that. You get the general screen. Now, of course, I don't have any history, so nothing shows up here yet. It does show you again how much per mile you should be getting. So every year this changes. It's based on a calculation to the IRS. And QuickBooks will update itself whenever that is changed by the IRS. So you can see how much it is. And I think it was like 54 last year, so it went up 2 cents. It can also go down. It has gone down in the past. Just it's based on what the anticipated expenses are. Now, with the gas prices, there are times where you can take your expenses off as opposed to the mileage. So if your company buys a car, for example, the expenses to run the car and all that can be deductible, but then you can't take the mileage. So it's like either or. So some places will keep track of both. And then at the end of the year, make a comparison or have their accountants do that and run them and see which is the better deal. So it does pay to do that. If you're using a company car, then it would be under, like we do the vendors as expenses, and they're just tracked with entering bills as expenses. So you're going to do that anyway because you're probably paying them out of your accounts payable system. So it just automatically tracks it. But then you can also put in the mileage here. Okay, we're going to click on Add Trip. Before I do that, this is a couple options. As before, if you have tracked this in another program, you can import it or download it. If you've got another file, you can download it in here, or if you did it in some other program like Microsoft Excel, you can import the trips from Microsoft Excel, so you don't have to key them in again. I'm just going to click on Add Trip, and you get this screen over here. So basically, add a business trip. So the first thing, pretty obvious, it's the date. The distance is calculated in miles, just FYI, so it's not kilometers. And I'm saying 100 miles. Now you'll notice we only have 3 items that we need to enter no matter what. So you've got the trip date, the distance, and business purpose. So everything else you don't have to include, but it's a good idea. If you want to put in a start point, you can. It doesn't have to be an actual address. It can be a city, so I'm going to put Patterson. Let's say endpoint Modesto. Okay. If you wanted to, and you want to be more exact, what you could do is you can temporarily hide this and go to the minimize and open up your Internet Explorer, and then use a program like MapQuest or something, and it will give you actually to the point, 1/10 of a mile, how long it was. The other thing you have to categorize is your business purpose. So as I said, picking up goods, supplies, meeting with client, things of that nature. So I'll click on meeting with client. And then if you had a company vehicle already set up here, you'd see the option, but we're going to use your personal vehicle. Now up here, I put in my distance as 100 miles. Down here, if I put round trip, turn it on, that means it was 100 miles one way, 100 miles the other way. If I don't, I'm only declaring it's just 100 miles, and it could still be round trip. It's up to you how you want to calculate that. But for a lot of things, like if you did use MapQuest, you put in the destination and where you started, and now a lot of times it'll just pick it right off your phone if you're doing it on your phone, and it'll give you the mileage rather than doubling it in your head. Just put the mileage up there, click round trip, and you're done. There we go. And you'll see here, it did the little math at 56 cents a mile. There's $112 potential deduction. So again, it categorizes the business usage. And you'll see it does a little chart. It keeps a graph of how much you use it. Down below, if you click on the word business, now you'll see I got 2 entries. Remember, I turned it on as round trip. So it's going to count those as 2 separate trips. So I got 100 miles one way, 100 the other way. Now, the question about mileage that comes up is, how accurate does it have to be? It doesn't have to be perfect, but if you're ever audited, if I said 1,000 miles, because I was trying to up my deduction, okay, that becomes pretty obvious, right? I didn't drive 1,000 miles. So that can be a red flag. So you try to just be as accurate as possible. Nowadays, though, I'll tell you that with MapQuest and things, if you do get audited, what they will do is they'll put in your starting address, end address on MapQuest, just like maybe you did, and it'll come up with a same or similar number. Okay, that's fine. Okay, you'll see the type over here, and we've got the dots. And you've also got the option to duplicate. So if you're making the same trip 5 times a week, you really want to keep them separated as each individual trip. So you can see there's duplicate. Duplicate will just create a new entry. I'm going to make this yesterday, without having to go to that screen again. So you see down below, now I got one for Sunday. If you already have one in as a single trip and you want to convert it to a round trip, you can just do this. And it'll pop up your window and you can make it a round trip. I don't want to do that because I already told it was a round trip. You'll also see if you selected personal. Under here in business purpose. You can also track your personal mileage in addition to your business. Sometimes you'll want to do that, especially if you're self-employed, because here's why. If you have a lot of mileage, it can sometimes be a red flag if it looks like you're using your personal car all the time and never for personal. So the way it works is, especially if you're doing things like ride sharing, then you can track it. You track your start date and your start time and your end time. And that way you're showing that, okay, here was business, and then the other time and the other mileage may be personal. So it helps to do that. If you ever get involved in like DoorDash or Uber, that's what they do, is they will track mileage. But I think I mentioned before, they only track once you get an assignment. So if you're driving around, cruising around Patterson, you're waiting, that mileage they don't track. Now that mileage counts. If you think, I got to drive here to see if I can pick up some new business, then that counts. But Uber and DoorDash, to my knowledge, do not track it yet. So they only track once you get a ride notice. So your distance from when you get the notice to picking up the traveler or the food, pick up the traveler and the food, deliver it, that mileage they've reported. The mileage that you drive out to go back into a waiting zone, again, they don't track. So it's better to track your own. It takes a little more effort, but you almost double your mileage at least, depending on what you're doing. The other thing that happens in those instances is as you're doing your delivery, that's your active time, but you're also spending time to wait for the next one. So like I said, that time and that those miles do count. So certainly track them if you ever get into those. And apparently more and more people are. The only problem is gas prices are scaring people off. So it's kind of like they need more money to pay for gas, but at the same time you burn more gas. So do you do the ride shares or not? All right, so here we go. They're all business. And I can see all my trips. So you're keeping like a journal. The thing is, you'll notice it didn't ask us any particular accounts. So this is not going to be an automatic tracking through our regular chart of accounts. So it's kind of like, that's why I said it is a QuickBooks function, but it's kind of like a side function. It's all part of the bigger picture, and it can be very useful later on. But for right now, we're just going to track it just for a couple trips here. So let's go ahead and add a trip. Make a distance 20 miles. Just going to type it right and type in Post Office Patterson. There's the post office. And the endpoint, we'll make it Delport, Ohio. There it is. So you'll notice as it's drawing these addresses, it actually is going to the internet. So this is one of those things that, again, if you're using the system, you have to be connected and live online. So our business purpose will be delivery drop-off, your vehicle. Go ahead and make it a round trip. There we go. So now it's listed 2 more times. you will see at the top up here, you do have options of doing it every year. And then one thing that's kind of interesting, just with everything else in QuickBooks, is you can run reports and do comparisons to see how your mileage changed. And if you keep track, you can't do it in QuickBooks, but if you do this in Excel and later just import it, you'll notice here when you import, you can select the file. What you could do is track other things, including your gas prices. So if you do that in a thing like Microsoft Excel, you just import the mileage part into QuickBooks and then reserve everything else. That can tell you how much mileage you're getting on your car, but can also tell you that let's just see the gas prices. You get a little chart, and I don't know if you want to see that because it's kind of scary right now, but it'll show you the ebb and flow of the gas prices, especially in California, because it's going to happen again this spring. They're going to say they switch over to their summer blend, and then all of a sudden the gas prices spike again. So any questions on mileage? There is another button here. It says manage vehicles. It's not a button, but it's a link. If you wanted to, you can add a vehicle. So you do a company car. What's your favorite car? Pick a car. Now, are you the kind of boss that economizes? Or you say, let's get a Lamborghini or something. We'll just say it's a Dodge Caravan for me. If you want to pick your own, you may. I'm going to make it a 2019. All right, so now you'll see there's ownership status. And if you own it, then the expenses are on you. If you lease it, then there can be a different tax advantage to that. So we'll just say we own it. You can put the date that you bought the vehicle. Let's make it January 1st. And then the date that you placed it in service. So the difference is when you bought it and when you started using it for the company. So let's make this one the week after, the 4th. All right. So the one thing you can do is set this as a primary vehicle, meaning this is the one you're going to use all the time. It doesn't mean it's the only one you use. You could set up more. And then just because you have a company car doesn't mean that you can also use your personal vehicle. You might need it on different occasions. So like I made a Dodge Caravan as the company van. Well, if I'm just driving to the post office and bringing some envelopes, I don't need that. I get better gas mileage in my car. I'll take my car. So things like that. You'll see there's an option by recording your odometer readings or by entering the total miles. So what we did before is we entered the total mileage. For this one, I'm going to leave the odometer reading and save it. So if I wanted to, I can add another vehicle. And again, if you have an employee who's going to use their vehicle, you can add it there. I'm just going to close that. And I'm going to add a trip. And down below, you'll see there's the Dodge Caravan. So make this one 20 miles. Now this time I'm not going to be specific. So I'm just putting the city twice. So it's basically within a city trip, that's 20 miles. And this time, picking up goods or supplies. And I'm not going to make it a round trip. So in this case, it might be like, let's say we ran out of staples. Okay, I'll get the staples. So you do it on the way home. So since you're going to the store from your business, okay, that's a deductible expense. But then from the store, you're going home, that's not deductible. So you'd only count that as a single way trip. And save it. And so you'll see the difference there. You get different vehicles. Here are the two. So this is something you can use. Not everybody uses it. It's okay. Like I said, I think I prefer Excel just because you can put more categories in it. And if you wanted to import it QuickBooks, you can always import it. The other thing you can do is, some people say, well, if I do an Excel and then I import it this month, next month I'll have to deduct all the last ones I already imported. You actually don't. QuickBooks will determine the duplicate entries and will warn you about that. It's kind of like when we imported our clients. So it's you can just keep doing it whenever you like. And that's basically how it works. So as you hover over it, you can see each month what your deductions potentially could be. And it's one of those things that you don't realize how much you do it until you start tracking it, and then it really adds up. All right. Well, if there's no questions on that, we're done with mileage. So we'll leave that there. So the next thing we want to do is we're going to try paying our sales tax. So to do so, let's make sure we have enough to pay. So let's go into our sales and invoices. So we're going to make 5 invoices to any customers you like, your choice, but date them September 17th. Why going back? Anything that we do now will be put into the next round that we owe the state. By putting them back in September, they'll be included in what we currently owe. Okay. Receive the payments directly to checking. So a couple ways to go about it. I'll go up here to new, invoice. Pick my customer when it comes up. Computer's going slowly. And then here's a point where you change the date. So I said September 17th. You can pick any product, any quantity. Just make sure it's taxed. And when I save a new, oops. Okay, since I didn't track starting this the flashlight, I can't do September. So I'll have to change, make it October. Let's make it October 17th. So now because I did the save and new and the computer remembered the last one was October 17th, this one will be October 17th. I'm gonna do an experiment, see if I can do any of them. Yep. On my hand sanitizer, let me go back to September. So now I'm gonna receive my payments in each one. So when you're done, all your balances should be zero for open invoices. And if you look at all your customers, I clear my filter here, they're all balanced, have a balance of zero. And then when we're done with that, we'll make 4 sales receipts for any customers dated October 17th. But the payment's going to the checking account. So you can click on New, Sales Receipt. When you get that done, it's 6:53. It's break time. We'll take a 10-minute break. We'll be back at 7:03. And we'll pay the state its fair share. All right, we're back. So when you're paying your sales tax, what it's going to do is accumulate all the sales tax from your sales. And again, it's only from those customers who are eligible to pay the sales tax. Remember, the last person to end up using the product is the one who has to pay the sales tax on it. And of course, not everything has sales tax. Food is not taxed, at least not yet in California. Some places do. And there are certain categories of products that aren't taxed, and services aren't taxed. So what we're going to do is go on the left-hand side here and click on taxes. And we're going to go to sales tax, but you can click the whole taxes if you want to see them all. You should see that right there. So when you set up your QuickBooks, you set up the sales tax. You could tell it what agency and what state you're in and the city. And then QuickBooks Online is really good about figuring out which agencies you have to pay and how much in sales tax. And you've seen that, how we do it based on our location. So I think I mentioned the story before that the way sales tax is calculated is changing because so much stuff now is done online. The question is, where does the sale actually take place? If somebody's in Virginia and they order it in California, did the sale take place in Virginia? Did it take place in California? Or did it take place where the server's located in Texas? You know, it's kind of like, where is really the sale? So you don't want to double tax, but there's a lot of state legislators who are figuring, hey, you know, with all this online stuff, we're losing a lot of sales tax. So the laws do change. So it's a good idea to keep up with those, and QuickBooks will assist you with that. So you'll notice here that I've got what I've collected here, and I owe $307.99. So that's based on all the sales I've been making. And that's both invoices and the sales receipts. So anytime you made a sale, you're collecting the tax. You'll see there's a button that says view return. Oh, by the way, it does say accrual basis, meaning when I do it really doesn't make a difference on the sales receipt, because remember, the sales receipt, the person comes in, they buy the item, they pay for it at that point. So at that point, the sales tax is collected. So there's really no lag time. But on the invoice, we send out the invoice, we wait for the customer to pay it. If we gave them 30 days, they might pay it on the 29th day. So we really don't collect the tax officially until that 29th day when we receive that payment, okay? Or maybe the 30th day because I mailed it. Well, on the accrual basis, it doesn't matter when you receive the payment. You're assuming you're going to get it, and so you're going to pay the sales tax based on when the invoice was generated. So if the customer doesn't pay, not only do you not get the money that you are owed for your products, but also you're going to pay their sales tax for them for something, you know, that you don't get reimbursed for. So that's what the accrual basis is, and you'll notice it's set up here. Almost always it's set up as the accrual basis. When you are working with government agencies or even large agencies, they like the accrual basis because it's more money. And the assumption is that you're supposed to receive it. That's why there's so many collection agencies out there, is because it really does cost business a lot of money if people don't pay. Not only cost them, but cost them what they didn't earn, but also cost them money what they had to pay on behalf of the customers. So, and even our state agencies and our accrediting agencies do the same thing. And when you would do the mill tax for the city business license, they like the accrual basis. Everybody likes the accrual basis except the one who has to pay it. All right, I'm going to click on View Return. It's going to pull it up. Okay, so here's the breakdown of what I owe. So it's going to give you the gross sales, which is the total amount of sales. And on those sales, how much of that is taxable? Now, you might not have any non-taxable sales. I think when I set up one of my products, I didn't make it taxable. at the beginning. And so I collected 59.15 in non-taxable. So if you're a business that has non-taxable items, or if you're reselling to a reseller, so again, they're not the end user, they're going to sell it to the end user, those sales will show up here as non-taxable sales. The taxable sales is what you're going to owe in the state. And on my right-hand side, I have the three amounts. So the state is my state sales tax, but remember, in Patterson and Stanislaus County, we have special sales tax. So you'll see the county and the district. Luckily, you only have to pay one check and it will go out to the state and the state divvies it up. But in the form that you're going to transmit, you have to show how much you're saying belongs to the state and how much belongs to their agencies. You'll see up here, you do have the option to go to the state's website. Based on California, it will actually jump you out to the state of California. So QuickBooks knows that you are in California. And that's their website. And now they like it all done online as well. If you subscribe to QuickBooks's services, they will actually generate that form for you. If you need to make an adjustment, you click it here. Here's the thing. It's pretty rare that you have to do an adjustment. And you want to be careful of those because those do catch the eyes of people when it comes in because it's going to be on the report. If there was a credit that you're essentially giving them credit like we did before, but you did not refund their sales tax and you still have to report to the state. If you did refund their sales tax, then it would just come out in the wash. They can also be prepayments, and you could also be catching up on other prepayments. So depending on how you scheduled payments with your customers. But like I said, this is pretty rare. You don't do this very often. But it is there just in case you need it. And then before I do my payment, I'm going to click on View the Tax Liability Report. So slowly it will come up with calculations here. Eventually. I'm going to do a refresh because looks like it got stuck. There it goes. This is the same report that you can get from your reports list. And like in my case, I'm saying, oh, I'm curious about this non-taxable. Let me check that out. So I can click on it and I can see when I didn't collect the sales tax. And you can also see when you collected sales tax. So it's a transaction report. So you can always back up these figures with the specific data and how QuickBooks generated these. And if you don't believe it, you can pull out a calculator and add it up yourself or move it into Excel. You will see that once again, they default to the accrual method. Well, actually, in my case, I could switch to cash and run report. It shouldn't make any difference whatsoever. Yeah. Because in our case, remember I told you, you would almost never have invoices that you're going to send to customers and get paid on the same day. But we're doing it for practice. So that's why. So what would happen is you would see a difference here of all the outstanding invoices that have not been paid yet would not be included in the cash report. But we're doing something special here. So that's it. And it, like I said, it doesn't matter anyway, because you're going to end up paying the accrual side. Let me go back to my taxes again. view the return. There it is. So I'm going to click on record payment. You'll see it carried over the sales tax amount that I owe. Once again, it reminds you that you have to run the report and send it along with your form to your agency. I'll select today's date. And then you're going to select your bank account. So that's our checking. And again, you can do this out of credit cards. What's happening though is you'll notice it doesn't say create check. It does say record payment and down here print check. So it's a little different than when we do our vendor checks. So it'll be in the register, but you still have to manually run the check. Or if you click print check here, it'll put it into a queue of unprinted checks. And when you're ready to go, you just click print all checks. They all come out at once. So we'll leave that turned off. So I'm going to say our November sales taxes. All right, I'll click on record payment. And here we go. So it says return paid at the top. And it just gives you a breakdown of what you paid. And you'll see on this November 15th page, or a link here, I can click on it. And it goes back to what I just entered. And it's paid. So now when you go to taxes and the sales tax report, it should say that you owe 0. Yeah. Because it's all paid off and now we're start accruing more for the next round. Let's take a look in the chart of accounts. Go to my checking account. And view register. There it is. And it looks like under our account, it says split. Okay, so you can click here on the word split and then edit. And it takes you back to your report. The reason it shows split is because not one person is getting all that money. It's going from 3 different accounts. And you can see those under the sales tax payable. So I'm going to go back to the chart of accounts. And I want to find that sales tax payable account. So I put in sales tax. And now I can view the register. And this will show you that you don't have anything current. Let's go back to our sales taxes. And now we've got a history. So there's history. Oops. And when you view the return, You'll see it's split 3 ways out of this. So anytime you see that word split, you know it's using different accounts. There's one total, but it's coming from different, in this case, tracking accounts. So even though it's still writing one check, it's still categorizing the sales and the sales tax from those different agencies and those different sales tax rates. Let's go and close that. And let's take a look. You see the top here, you've got sales tax settings. So just like all of our other accounts and our vendors, you can make them inactive. If you were leaving California and moving to Texas, then you're not going to do any more sales in California. You can mark it as inactive. That would be an example when you would do that. Otherwise, you usually don't mark those inactive very often. Also, you'll see there's this turn off sales tax. If you use turn off sales tax, it'll just stop charging sales tax at this point forward. However, you're still going to have all that history in there because those were actual transactions. And like I said before, it doesn't delete history, it records history. It just won't do it from this point forward. Again, that's a rare thing. Some companies might do that if they're just going to move to the wholesale business and stop doing retail. Well, if you're a wholesaler, you don't charge sales tax, so turn it off so you don't see that. And there's no way your clerks, when they're entering the invoices, will accidentally charge sales tax because it'll be turned off. You can also click here to add an agency. So if you were working with, say, another state, you can add whatever state, city you're in, or I think it's by county, right? It does both, city or county, and the computer will calculate which taxes they have there. So in the desktop version of QuickBooks, you used to have to enter this manually, and you'd have to know the sales tax to get set up. But in this case, it'll look it up for you. And as you can see, every jurisdiction has different rules. And there's a couple of them that don't charge sales tax at all. So you can skip that. And that's why people like to go there. So that's, and if you do that, by the way, like I believe, isn't Las Vegas no sales tax? Let me find Nevada. I think it'll do it. Yeah. See, I don't. Let me try. Yeah, maybe not. But I don't think it does the negative. If you don't charge sales tax, I don't think it'll do that. It'll let you put it in manually, but that would be wrong. And then the deal is any sales tax you collect by accident still goes to the state. Or you can refund it. If you can call the customer and refund it. But if you accidentally had your sales tax turned on and you sold 50 invoices worth of items to 50 different customers, you probably just want to turn over to the state rather than try to refund it. And then if the system can't find your rates for whatever reason, you also have this custom rate category where you can create new ones. Again, that's a rare thing, especially now because it's gotten pretty good at getting all the jurisdictions in there. There are times though where your sales tax will change, especially if you're in like the city of Los Angeles. So there's a city sales tax, a county sales tax, and then the state of California sales tax. So then they also have, like we do, their own initiatives that add just 1/4%. There was one I live in Atwater, one in Atwater last election, and they said just like 0.5%. That's all we need. And yeah, except that's what you said last time. And there's like 4 or 5 different 0.5%. And the problem is, well, not the problem, but one of the burdens of the businesses is that's one more thing they're going to have to collect. Now, luckily, if you're using QuickBooks, just tax it on. But you do have to make sure that if that passes, usually they make it start January 1st. Not always. Sometimes it's July 1st. And sometimes it can be mid-year. You got to watch it. But even if QuickBooks misses it for some reason, you're still responsible as a business owner. So you want to make sure you get that. The way it works is if you set up your business as an owner, as sole proprietorship, then you are personally on the hook for those taxes. If it's a corporation and you go bankrupt, then you aren't personally on the hook. It's the corporation, and of course, the corporation won't exist anymore. So it's one of those things about how you set up your business. It can make a big difference. Hopefully, that never becomes a problem. But just keep that in mind that as the sales taxes change, your QuickBooks will change too. And it's funny, most taxes are added on. They're very rarely do they disappear. So we did have one, it was a Loma Prieta earthquake, and it was California. And what they did, it's a good thing they did it this way. To get it passed, they said, okay, we're going to do, I think it was a 0.5 cent or a 1 cent 1% sales tax. And it was, of course, not much. It's never much till it's added on with everything else.
Yeah.
But they did for a certain period, but in the law, it's sunsetted, meaning this will go until December 31st. So they put it in there, and that was one of the ways they got it through to prove it was going to be temporary. And sure enough, right, as it got close to December, they said, maybe we should, other things we could do with that. Maybe we should extend that, People said, oh, no, you promised. So, it's kind of hard to get a sales tax increase. So they thought, well, we already got one and we're just extending it. People obviously are already used to paying it. But sure enough, they didn't get it extended. So on the 31st, all the QuickBooks or accounting programs at that point had to be manually updated to stop collecting that tax. So that's why I said you do have to keep an eye on these things. Nowadays, though, I believe this QuickBooks would catch it, but you can't rely on it because that'll be the last thing you'll tell the judge on your way to jail.
Yeah.
It was QuickBooks' fault. Yeah, sure, right. So any questions on that? I'm going to go back to my sales tax center. So everybody understand why now I only have 0 sales tax due. All right, let's go back. Now, let's make 3 more invoices with today's date and receive payments to checking. And when I do mine, I'm going to show you one of the things you kind of have to watch out for in QuickBooks. QuickBooks, it's so helpful. Sometimes you rely on it too much. So I'm going to create invoice. So you kind of just start assuming QuickBooks is going to get it right. Remember I said it's going to be today's date now, but the last ones I was doing was the 17th. Well, when you start doing these, do you always check the date? Nah, it's got it right. Well, we reset the date. So that's the one it's going to default to. If you are at a company where some companies will do this, where they're using QuickBooks to record things, but not necessarily generate them. In other words, you're keying in invoices that have already been processed somewhere else. So they might have different dates. You might have 3 days worth of invoices with different dates. You really do have to keep an eye on it. If you're using QuickBooks to generate it, like all invoices you're going to enter today are going to have today's date, it's usually not a problem. Where the problems come is when you assume that, and then you do go back and you make a change, and then you forget to look at it. They'll all have the wrong date. Is that big a deal? It could be because right now that's almost 30 days past due. And remember, I'd made all my customers 30 days. So if I don't correct that, they'll start getting notices that you didn't pay it on time. And then they call up very upset. And then what you do when that happens? Blame the computer.
Yeah.
Oh, I'm so sorry. Our computers, they shouldn't have done that. You're right.
Yeah.
Let me fix it. Well, the computer didn't do it. Just I didn't pay attention and I missed it. But luckily so far they don't speak up and say, hey, it wasn't me, it was the user. I'm going to save a new. So now after I do it to correct the date, it will automatically come up with today's date. So now I'm receiving my payments. Just FYI, one of the reasons it doesn't change the date on this one is because if it did go back to October, that means you're paying on an invoice before it was created. So QuickBooks knows not to do that. So that carried forward. I have one more down here. So after you get those in, you go back to your taxes and look at your sales tax. You'll still see it says 0 sales tax due, because it's not sales tax collected. It's currently how much is due. Since we just paid November's and those sales taxes were occurred in November, they're not going to be due to the end of the year. So it's every 3 months, it's quarterly. And it will only tell you here how much are due. If you want to see what's been going on, you can always go into the chart of accounts. And then you can scroll down. I'm just going to put in the word tax. So here's California, Department of Tax Liabilities. You can view the register. And you can see the invoices we just did today. So it's still tracking them. You just can't pay them all. In the desktop version, we used to be able to trick QuickBooks into paying it early. So we could pretend like we're practicing. But in this one, it's pretty good about catching that. It's funny. But it's still tracking it, so you can always look there, and you can see it there. And then if you go back into your sales and your products and services, oh, there it is. So you can always see which items are taxable, and I see the one I missed. I scroll down, my dog rawhide treats are not taxable. So I change that right now. Although I think in the real world that I don't think dog treats are taxable. I don't think dog food's taxable. Until it's kind of a toy. So it didn't find it in my list here, so I'm just going to tell it, I'm going to override it, tell it to do the standard rate. And there we go. Now it shows the tax. I think that's what I did. I think when I entered it, it thought it was food. So any questions on paying the sales tax and how it's accrued? Is it too easy? It's even trickier if you're doing it all by paper. You know, back in the old days, that's not that long ago. And it can be tricky, but it's especially if you have a lot of transactions, because every single transaction cuts a little bit of that sales tax and it keeps adding up. But that's the good part about QuickBooks. It's doing it automatically in the background. So the other thing too is I like how they let you just pay the one sales tax to the state, and they figure out where it goes. Because I would hate to have to do 3 different jurisdictions. You know, it doesn't seem like a lot, but it does take a lot of time for employers or owners of businesses to keep track of all this, which is why they pay accountants to come in and do it, or bookkeepers, because you know, just got to keep track of it to keep the business going. The other thing about sales taxes, as I mentioned, they do change, so it's never going to be the same, and the sales tax rates go up and down. Well, usually up. I don't know if you ever, when you get a gallon of gas, if you look, a lot of gas stations put up stickers. Here's how much you're paying in sales tax, or in taxes, not just sales tax, because there's taxes now. They call them fees that you tack on, and you know, again, that's where all the money's going. I did when they were trying to pass the last gas tax. I heard somebody interviewed who was pushing it, and he was for it, and he said they asked him about that. Well, this is for, you said it's for roads, but isn't that why the state increased the rate of the car registration supposed to pay for roads? He said, yeah, but this time we're serious. Yeah, did he just say that? No, I couldn't believe he said that, but he was. So, and that I will say, there's a lot of construction going on. That's what's doing it, but you can really tell how high the gas taxes are. And they, they were running into problems because when people were not driving as much and when people were using electric vehicles, they weren't getting enough money from the gas taxes. And so a lot of the things they wanted to spend it on, it wasn't coming in because, so they said, well, we're going to change it now to a mileage fee. So they'll, instead of now paying a gas tax, you can do a mileage fee. And I thought, I was telling somebody, the other thing is they could do both. And sure enough, somebody said, well, we don't have to do just one or the other. We can do both. And I was thinking, oh man, that would be terrible, especially right about now. But anyway, that's the way it goes. So as a business, you keep track of whatever happens. Speaking of whatever's happening, remember when we set up reorder points? I've got something showing as low. I got low stock on something. My tire gauges. Yeah, I'm down to 18 because of the sales I just did. My reorder point is 22, so it's reminding me to place the order. All right, well, if there's no questions about sales tax, we are done for the evening. And go forth and spend money and spend sales tax. By the way, if you're ever looking for that sales tax report, the other way to get to it is through reports here. And run the sales tax liability report. There you go. Do you have the Save Mark card?
No, I don't even, I put in the number. I don't even know what it's good for.
No. So what they do, they are supposed to give you discounts on certain things.
Yeah.
And I think the high school does it here. They give them cards to hand out to people. And when my son was in football, my mom said, what you should do is right before Thanksgiving, stand out in front of the, because they give you this whole stack of cards, stand out in front of the store and ask people to use the card, because then you get the discount as the card holder, but then the football team got a cut.
Yeah.
And she said, right before Thanksgiving is the time to do it, and everybody's buying all that food. Yeah. So make sure you sign up for the problem with signing up for them is then they track your information. So some people don't care for that. But yeah, for a little discount, I'll take it.
Yeah. Everything's going up.
Right.
See you tomorrow.
See you tomorrow.
Yeah.
You're welcome.